Pyramiding into stocks is something that's also often talked about with active traders. The typical pyramid that you may hear of with a 10% position is to scale in 5, 3, 2. See how that makes sort of a pyramid? And you can add to your position in a couple of different ways. There are some expert traders out there like Mark Minervini, for example. He doesn't want to add to his position until the stock sets up a new proper follow-on entry point. So he's not just looking at his percentage gain that he has, he's looking at tight areas or maybe pullbacks to shorter term moving averages before adding to that position. And again, I think it goes back to knowing what type of market you're in. So say you start with a half position, add an early entry, and the stock breaks out. Well, in some markets, that's actually a better opportunity to take profits at that point rather than add to your position. If you are in a market that you're seeing a lot of sector rotation and again, uncertainty, you shouldn't be adding at a breakout if you're seeing a lot of breakouts fail or start to stall shortly after they happen. But if you are in a very strong market that's great for growth investors or your style of trading and you are seeing follow-on breakouts, then adding on at a breakout area would probably be a good idea. Other spots that you can look at for adding to a winning position would be a pullback to the 10-week line, the first and second test of the 10-week line after a breakout, or if you are in a strong rally, maybe it's just a pullback and a reversal off of the 21-day line.